This is a chart of end-of-day data of the US dollar and Japanese yen Forex pair. Nicholas Darvas was a professional dancer who started with $10,000 and while on a world tour made $2 million on the stock market in 18 months back in the mid-1950s. He traded without charts or a computer, using data that was usually a week or more old, by using his idea that he called the Darvas box. He would set an arbitrary range for a stock and buy when it exceeded that range and sell when it went below that range. Using today's computers, his idea is clearly visualized by plotting the Darvas box. I wrote the Darvas box indicator after reading his book, How I Made $2 Million on the Stock Exchange. I've seen many examples of Darvas boxes on the internet, but I have yet to see an example of a Darvas box that is plotted correctly and follows the examples in Darvas's book, other than what you see here. What is the difference? As Darvas points out in his book, all the boxes must be the same height. Even though these optically may not look the same height because they are different widths, each box shown in this video is the same height as all the other boxes. If their boxes are not all the same height, then they're useless. These boxes expand horizontally until the range is broken. You can see the last box on the chart is different than the other boxes. This is a preliminary box. It does not change into a permanent dashed line box until the range is violated by the equity. If we go back to when the US dollar Japanese yen combination started up, we can see a preliminary box which formed right in here because the equity moved above this previous formed box here. This preliminary box will then expand with the equity until it reaches the same height as the other Darvas boxes. If we move along a week, you can see that the preliminary box is completely formed here and is the same height as the other boxes. On an up move, the equity will very often retreat to the bottom line of the box and then will start on its way up and very often break the top barrier of a box on an uptrend. So this is a good area to enter a trade when the equity touches the level of the lower box. As you can see, a week later the equity went above this Darvas box here, and another preliminary Darvas box is forming right here as the uptrend continues. Moving ahead to the current date, I wanted to point out another couple features of this chart. The indicator shown below here is what I call time series differential, and it has variable overbought, oversell zones. This indicator can very often predict a change in direction of the market. What happens is you can see this yellow overbought line here moves down considerably, so it's right above the zero line here, and that happens well in advance of a continuing downtrend of the dollar-yen combination. You can see then we have a buy signal in here. The indicator turns green to confirm that buy signal, and the overbought line moves up in here. Here you can see the oversold line starting to move up. When this gets higher, that's a good indication that the equity is going to change direction and start down from whatever point that might be. When the equity breaks below this lower barrier of the Darvas box, that would be a time to exit the long trade. Right now that level would be 103.0673. The reason I decided to make this video is there is an article in Bloomberg yesterday, May 2nd, that says traders are now bullish on the dollar since the Federal Reserve lowered interest rates on April 30th. I was curious if this timing was correct, so I plotted the US dollar Japanese yen Forex pair to see if that was indeed true. April 30th, right here, and as you can see, the dollar yen pair has actually moved down since that drop in interest rates. Another decrease in interest rates happened back on the 30th of January, which is right in here, and as you can see, there was not much happened to the dollar yen ratio, and indeed on March 1st a significant decline started in that ratio down until March 18th right in here. Even if you trade Forex intraday, it's nice to know what the direction of the longer term trend is on a daily basis.